Good day and welcome to this presentation. This is part D and we are going to focus on the non-controlling interest in this presentation, as well as the calculations that must be performed when dealing with non-controlling interests. In our previous recordings, we have looked at identifying the acquirer, determining the acquisition date, identifying and measuring the consideration transferred. And in part B, quite recently, we also had a look at how to recognize and measure the identifiable assets acquired, as well as the liabilities that are assumed. But now we need to still have a look at the non-controlling interest in the acquiree. So if we have a look at the recognition and measurement of our non-controlling interest in the acquiree, this will be the percentage of shares that are not held by the parent. So in other words, if the parent owns 100% of the shares, there will be no non-controlling interest. But if the parent only holds 90% of the shares, then the other 10% will be the non-controlling interest. Okay, so your non-controlling interest is a percentage of shares not held by the parent. Now, there are two ways in which the non-controlling interest can be accounted for. The first way is by using the fair value of your non-controlling interest. And in this case, if there is goodwill, the goodwill will include a portion that is attributable to your non-controlling interest. The other method is to use the proportionate share of the acquiree's net identifiable assets at acquisition date. Now, in this instance, no goodwill will be attributable to the non-controlling interest. Now, let's go have a look at an example to illustrate the two different ways in which your non-controlling interest can be calculated. So let's have a look at a quick example just to show you or illustrate to you how the two different methods of calculating the NCI will work. So here we have P Limited, who obtained control with the acquisition of a 70% equity interest in the share capital of S Limited on 1 January 2018. At acquisition date, the equity of S Limited consisted of the following. We have share capital of 110,000, retained earnings of 70,000. Then they tell us about how the purchase price was settled. So the purchase price was settled as follows: a cash payment of 120,000 on 1 January 2018. And then there was a transfer of a motor vehicle with a carrying amount of 60,000. The original cost of the motor vehicle was 100,000 Rand. The fair value of the motor vehicle on 1 January 2018 was 70,000 Rand. Ownership of the motor vehicle transferred to former owners of S Limited. Then we are told that on 1 January 2018, the assets and liabilities of S Limited were fairly valued at acquisition date, except for land, which was revalued by 100,000 Rand more than its carrying amount. So all of that you've already dealt with in part A and part B of the presentations. So here is where the new part comes in. The market value per share on 1 January 2018 amounted to 2 Rand 50 per share. So if we have a look at the required, first of all, we need to calculate the non-controlling interest if A, the non-controlling interest is measured at fair value. So we need to look then at the fair value of the shares. Or B, the non-controlling interest is measured using the proportionate share of the entity's net identifiable assets. So in other words, you're going to use the net assets and calculate what portion belongs to NCI. So let's have a look at the calculations. If we now look at the calculations, Part A said we had to calculate the non-controlling interest at fair value. Now, as the name suggests, we need to calculate the fair value. So our first step is to actually calculate the fair value of the entity as a whole. So to do this, we take the number of shares issued, multiply by the market value per share. So the number of shares issued in this case was 110,000 shares, and the market value per share was 2 Rand 50. So that gives us a total fair value for the entity of 275,000. Now, the percentage of shares that are held by our non-controlling interest is 30%. So we need to multiply the fair value by 30%, and that would give us our non-controlling interest at fair value, which amounts to 82,500. In our next example, part B, we now need to calculate our non-controlling interest, but using a proportionate share of the entity's net identifiable assets. So again, remember that the name is actually telling you how to calculate it. So we're going to start off by using the net identifiable assets of the entity. And we know that our net identifiable assets are made up of our net assets being equity, which was 180,000. But remember, when dealing with consolidations, it must be your net identifiable assets fairly valued. Now, in this case, there was a revaluation surplus applicable as land was not fairly valued, so we need to make that adjustment. So we need to include the revaluation surplus after tax using the CGT rate, which gives us 77,600. And that means that our total net identifiable assets amounts to 257,600. Now the next step is just to apply the percentage of the shares held by our non-controlling interest, which is 30%, and that means that our non-controlling interest using the proportionate share of the entity's net identifiable assets will be 77,280. Thank you for watching on how to calculate the non-controlling interest as well as what it is. And now in the next presentation, we are going to focus on our second last step, being our goodwill or gain on bargain purchase. Thank you for watching. Bye.